Have you ever looked at Bitcoin and wondered if you should be jumping on what might be the future of money? Or maybe, like some, you've been holding it for years and watching this roller coaster, and it has been a roller coaster, and you're maybe wondering, is it time to sell? Is its run over? After all, it's averaged around a 70% annualized return since 2019. Now, I don't think that's sustainable over the long run. I don't think most people do, but for a short-term speculation, is it still worth going along for the ride? So today we're taking a clear-eyed look at Bitcoin and whether it actually fits inside a smart investment portfolio beyond speculation. Now, a quick note here is that nothing in this video is financial advice. I'm sharing this for educational purposes only. So let's get started. Now, Bitcoin isn't easy to classify. It behaves a little bit like a currency, but one that's decentralized, transferable, and free from central bank control. It behaves a little bit like a commodity because there's limited supply. And it behaves a lot like a speculative growth stock. It's volatile, emotional, and sentiment driven. Now that's exactly what makes it both fascinating and unnerving to investors. It looks like it could be the future, but it also is so unique that we hardly know what to do with it. So let's take a look at Bitcoin's actual value. Where does its value come from? Because unlike gold or silver, it has no physical use. You can't melt it, you can't mold it, you can't build electronics or jewelry with it. Its value comes from its uniqueness and the confidence that it inspires. It's a currency unlike any other currency, and that inspires the confidence in its eventual potential stability as a store of value. The confidence arises from the fact that no single government or central bank can manipulate its supply. The transactions can happen freely without interference, and its total quantity is set in stone. 21 million coins will ever exist. That's predictability, and it creates digital scarcity. And in finance, scarcity defines value. But it's not without problems. If you lose your digital keys, you lose your coins, and you may lose them for good. And even today, most people aren't spending Bitcoin, they're investing in it. Whether that ever changes is still one of Bitcoin's biggest unanswered questions. Over the last 6 years, Bitcoin's average annual return has been around 70%, which is incredible by any standard. But as those who owned it throughout those years will remember, those gains came with some dramatic volatility, and we're talking close to 80% or more drops in value in years like 2014, 2017, and again in 2021. Now, volatility isn't inherently bad. They got some amazing upside, but it's only dangerous if it dominates your portfolio, if it's your life savings. A little high volatility exposure can actually improve diversification if that asset moves differently from everything else that you own. So where are we today? Bitcoin's short-term moving average distance, which basically means how far its price sits from its short-term trend, is within the normal range. What does that mean in English? It means there's no major sign of short-term hype or panic right now. It's not clearly overvalued and it's not obviously cheap. Now that doesn't mean it's a buy or a sell signal. It just means that there's no red flag of irrational behavior in Bitcoin's price right now. Nothing that would make me change my allocation based on short-term speculation. But when used as part of a diversified strategy, there's actually an argument to be made here for investment value in Bitcoin. Diversification isn't about owning lots of things. It's about owning different things, assets that move differently from one another, independently, not necessarily opposite to one another. We may not want opposite, but just differently over different time frames. And that's where correlation comes in. Correlation is measured on a scale of +1 to -1. +1 means two assets move exactly together. 0 means no relationship at all. And -1 means they move in perfect opposition. Basically, they hedge one another. They cancel each other out. So when thinking about diversification, we like to see numbers closer to 0. I ran the numbers on the past 12 months of price data, and here's what I found. Here's what that means. Bitcoin and metals like gold or silver exhibit almost no relationship, at least over the last 12 months. Bitcoin versus stocks and bonds, well, recently the relationship has been moderately negative, opposite. It often did well when those others did poorly and vice versa. That makes Bitcoin behave almost like its own world. Now, over longer periods, it's had a slightly positive correlation with stocks, around positive 0.2. So this past year's inverse movements may just be a temporary phase, but it's worth noting. Now, because Bitcoin doesn't fit neatly into traditional boxes, it's best thought of as an alternative investment. So we have stocks, bonds, cash, and alternatives. This would likely qualify more as an alternative investment, like real estate or commodities or private equity. Now, alternatives aren't about outperformance. They're not a way to outperform the general stock market most of the time. They're about behavioral difference. They zig when stocks zag, so to speak. Most investors keep alternatives around 15% or less of their total portfolio. And Bitcoin, given its risk, probably belongs around 3 to 5% at most. That way an investor can benefit from its potential upside without letting its wild swings throw off your entire plan. So sort of like one might hold some Nvidia or Meta or Tesla, but certainly not as their whole life savings or even the majority. Now again, just a reminder, this is not financial or investment advice. So everyone's gonna have to make that decision whether to hold it or not on their own or in combination with a financial advisor who's working directly with them. So in the end, should you own Bitcoin? Well, that's a question that only you can answer, but here are some things to consider. The case for it involves the fact that it's historically exhibited a very high return potential. It has semi-low long-term correlation with stocks and bonds, so it creates diversity. It gives you exposure to the emerging digital infrastructure, which likely could be the future. The blockchain almost certainly will be. And if you believe in its cause, which is decentralization and limited quantity, then holding it is a way to support its future. The case against it is that it has exhibited extreme volatility. There's still regulatory uncertainty, and it's going to rely on its adoption as a currency, as a medium of exchange, as a store of value, as well as the sentiment surrounding it. Ultimately, it comes down to two things: your risk tolerance and your conviction. For disciplined investors, the goal isn't to bet on Bitcoin. We're not betting on its direction in the short term. It's to build a portfolio resilient to many ways that the future might unfold. This gives you the better risk-reward trade-off. A small, well-sized Bitcoin position, rebalanced and integrated into a diversified plan that likely involves stocks and possibly some bonds, can do just that. It allows you to engage with the exploratory future of finance without overexposing yourself to it. Bitcoin's role is about math and behavior. It moves differently than other investment types. It's finite, it's limited in scope, and its use is really still evolving. That makes it interesting, but uncertain, and that's why the reward has been great so far, but the risk has also been painfully real along the way. For investors looking to remain strategic and reasonably curious, they might consider keeping the position small, like you might with a mega cap stock, like one of the Magnificent Seven. 3 to 5% of the total portfolio tops would be strategic, and rebalancing it regularly to remain within or close to that range. Used wisely along your wealth expedition, Bitcoin can act like fire. Think about it like fire. It's powerful when controlled and destructive when not, when it gets out of control. If you found this breakdown helpful, don't forget to hit like, subscribe, and turn on notifications, because we've got much more coming down the road, including a membership platform that's going to offer weekly insights, challenges, and actionable steps that help keep you on track toward ultimate financial freedom, toward comprehensive wealth financially, while also maintaining the wealth of time, flexibility, and purpose, all very important types of wealth. It's going to be incredible. Check it out and consider becoming a founding member. We launch in just a few weeks or sooner. I'll paste the link below if you'd like to be a part of it. Thanks for watching, and I'll see you down the trail.